Hey everyone, and a huge, warm welcome back to Eco Wealth Lab. Seriously, it's great to have you tuning in again.
Yeah. Welcome back, everybody.
Now listen, we need a tiny favor, just a small one. Think of that one friend, you know the one, who's maybe just a little bit crypto curious or finance curious.
Mm-hmm.
Could you maybe, possibly, gently nudge them our way? Tell them about the show. We promise good karma. Maybe even like a crypto tip whispered in their dreams. Probably not, but hey, worth a shot.
Right.
Yeah,
Yeah, help us spread the word. It genuinely helps more people navigate all this stuff.
exactly. All right, enough begging. Let's get to why you're actually here. The crypto world, it never sleeps, does it?
Never. There's always something happening.
So we've done the digging for you. We've waded through the news, looked at the charts, tried to connect some dots on what's been going on lately. We'll give you the highlights, keep you updated, but hopefully without making your head spin.
Sounds good. Ready when you are.
Okay, let's kick off with the big one, Bitcoin. It's been dancing around, what, $85,000? Still a hefty number.
Definitely. And the overall market cap for crypto saw a little bump, about 1.17% in the last day or so. Pretty modest.
But there's this idea floating around, isn't there? From Mike McGlone at Bloomberg Intelligence. He's talking about a potential consolidation, a hangover almost.
Ah, that's his take. He called the recent run-up the biggest pump in history. So his thinking is maybe Bitcoin needs to catch its breath now.
And part of that thinking is tied to the ETFs, right? The Bitcoin ETFs.
Exactly. He's pointing to some pretty noticeable outflows from Bitcoin ETFs over the last few months.
So the initial big rush of institutional money might be slowing down, or they're taking profits.
It could be a bit of both, or maybe a reevaluation. It's just that the initial, perhaps slightly euphoric institutional buy-in we saw right after the approvals might be moderating a bit.
Interesting. And this is happening while gold, which is
Yeah.
kind of down, is suddenly looking stronger again.
Right. Gold's seen a bit of a reversal. McGlone even floated the idea that maybe 2024, with all this intense crypto activity, represented a kind of peak for risk appetite among investors.
A risk asset apex, as he put it. So people potentially moving towards things perceived as safer, like gold.
That's the potential narrative, yeah. The timing of the Bitcoin ETF outflows and gold picking up,
Right.
it fits that picture. Are big investors getting more cautious overall? It's a valid question.
But hold on, wasn't Bitcoin surging just the other day? Like Friday to Sunday?
It was, yeah. It jumped from around $79,000 up past $85,000.
Right.
So, there's still clearly buying pressure there too. It's not a simple one-way street.
Definitely not. Lots of mixed signals. And speaking of mixed signals, or maybe just strong signals, Robert Kiyosaki.
Ah, yes, Mr. Rich Dad, Poor Dad.
He's out there, as usual, predicting, gold and Bitcoin to the moon, silver getting a huge boost, and the U.S. dollar collapsing alongside a market crash.
His standard playbook, really.
Mm.
His advice remains consistent. Bitcoin, physical gold, physical silver. He's deeply skeptical of traditional finance.
And his message definitely resonates with some people, that's for sure.
It does. That deep distrust of fiat currency and institutions is a core part of his appeal.
Okay, so while he's painting that picture, we've also got this technical thing happening in the stock market, the S&P 500 death cross. Can you quickly explain that?
Sure. So in simple terms, it's when a shorter-term moving average of the index's price, usually the 50-day, crosses below a longer-term one, like the 200-day.
And that's generally seen as a bad sign, bearish.
Often, yeah. It suggests recent price momentum is weakening compared to the longer-term trend.
Right.
It's not a crystal ball, but it can make investors nervous, maybe contribute to a more risk-off feeling.
Gotcha. So broader market jitters, potentially. Now, looking away from Bitcoin for a sec, the rest of the crypto space seems, well, all over the place.
Yeah, mixed bag is an understatement. You've got some, frankly, obscure coins like Dojinmei and Tashi posting massive gains.
Right, like huge percentages.
While the bigger, more established coins are seeing much smaller moves or even slight dips. It tells you there's still a huge appetite for speculation out there. High risk, potentially high reward gambling, really.
Even when the bigger picture seems uncertain.
Exactly. It highlights the different types of players and motivations in crypto.
Okay, let's circle back to the institutions. We talked about the ETF outflows, but then there's MicroStrategy.
Ah, yes, Michael Saylor's unwavering conviction.
They just keep buying another 3,459 Bitcoin just now for, what, $285 million?
Yep. Brings their total stash to something like 688,000 Bitcoin, worth around $35.9 billion. It's staggering.
So how do we square that with the ETF outflows? It's like two completely different institutional stories.
It really is. It shows there isn't one institutional view. You have some potentially using ETFs more tactically, managing risk, maybe taking some profit. And then you have MicroStrategy, playing a very long game, treating Bitcoin as a core treasury reserve asset. It's a fundamental belief for them.
Fascinating contrast. Okay, and still on institutions. Canada's about to launch spot Solana ETFs with staking.
That's right. April 16th is the date. And yeah, the staking component is interesting. It's the first major altcoin ETF in North America.
So people can basically earn yield on their Solana through the ETF without having to do the staking themselves.
That's the idea. It offers potential passive income. But, investors should probably understand there are still underlying risks with staking itself, like slashing, for instance.
Slashing. What's
It's
that?
basically a penalty. If the validator the ETF uses messes up or acts maliciously, a portion of the staked Solana can be forfeited. The ETF provider manages it, but the risk exists. Still, it's a big step for altcoin access.
Definitely one to watch. Meanwhile, down south, the US SEC is taking its time.
Seems that way. They've delayed decisions on things like staking ETFs and also in-kind crypto redemptions, pushed them to June.
In-kind redemptions, meaning getting actual crypto back instead of cash.
Exactly. The SEC says they need more time to figure out the long-term rules for digital assets. They're likely grappling with custody, operational risks, how it all fits existing regulations. It's complex stuff.
No kidding. And still on the ETF beat, rumors swirling about a potential XRP ETF, maybe in 2025.
Yeah, there's chatter about that. Naturally, it gets the XRP community excited about potential price impact. We saw what the Bitcoin ETFs did for accessibility and institutional interest.
Right, that potential stamp of approval and easier access can be a big deal, but just rumors for now.
Absolutely. Regulatory approval is never a given.
Okay, let's shift gears a bit. Stablecoins, they feel like they're moving beyond just being trading pairs on exchanges.
Definitely. Their utility is growing. They're increasingly bridging that gap between TradFi and crypto.
It's like Robinhood using them for 24-hour trading. That seems like a practical use case.
Exactly. Stablecoins can act as that bridge when traditional bank rails are closed or slow, allows continuous market access, which people want.
And the cross-border payment potential still feels huge, doesn't it? Faster, cheaper transfers.
That's a major driver, for sure. The efficiency gain compared to traditional methods is really compelling.
And we saw Visa jump into this space, joining the Paxos USDG stablecoin group. First big TradFi name in there.
Yeah, alongside crypto firms like Robinhood, Kraken, Galaxy Digital, it's a pretty significant signal from Visa. Suggests they see stablecoins playing a real role in future payments.
Interesting. And JP Morgan is expanding its blockchain payments too, adding British pounds now.
That's right. Using their Connexys platform, they already had US dollars and euros. It just shows these big banks are actively building and using this tech for real-world payments.
Okay, so lots of building and integration happening, but now for something less positive, the M&TRE token, OM.
Oof, yeah. That one took a massive hit, down like 90% in 24 hours.
90%. That's brutal. And immediately, there are cries of foul play, insider selling.
Unsurprisingly, yes. Allegations of a rug pull surface very quickly. Community trust just evaporates in situations like that.
And there's apparently on-chain data. People tracking wallet movements, showing big transfers of OM tokens to exchanges before the crash.
That's what analysts are pointing out, yeah. Including from wallets supposedly linked to a group called Laser Digital, seeing large amounts move right before a price collapse. It looks suspicious, to put it mildly.
So the M&TRE team is denying it all.
They are. They're denying manipulation, blaming reckless liquidations on centralized exchanges. But, that on-chain data makes people skeptical.
I bet. And the CEO of the OKX exchange apparently called it a big scandal.
That's the report, yeah. Doesn't help confidence. Laser Digital also denied involvement, saying their main holdings are locked. The M&TRE co-founder is pointing fingers at forced liquidations by exchanges.
So it's messy, conflicting stories, lots of distrust.
Very messy. It's a stark reminder of the risks, especially with newer or less established tokens.
Yes.
And it highlights the power exchanges can have. You really need to do your homework.
Absolutely. A cautionary tale for sure. Okay, lightning round for a few other developments. Kraken is getting into U.S. stocks and ETFs.
Yep. Partnering with Alpaca. Starting phase rollout, plans to expand elsewhere too. Another crypto platform becoming more of a TradFi broker.
NVIDIA building AI supercomputers in the U.S. Big investment there.
Huge. $500 billion plan with partners. Boosts AI infrastructure. Could have knock-on effects for energy use, maybe even some AI crypto links down the line.
U.S. Homeland Security probing Anchorage Digital Bank.
Yeah, reports of a probe over potential financial crime compliance issues shows regulators are keeping a close eye on crypto banks.
South Korea blocking unregistered exchanges.
Right, 14 apps blocked on the Apple Store there, including some big names. Part of the global regulatory tightening trend.
And finally, Tether, backing a new Bitcoin mining pool. Ocean.
Yeah, one created by a Bitcoin core developer, the angle seems to be supporting decentralization in Bitcoin mining, which is generally seen as a good thing for the network's health.
Wow. Okay. That really was a whirlwind. So, summing up, what are the big takeaways?
Well, it's clearly a complex market. You've got macro pressures, different views on Bitcoin's next move. Is it consolidating or still got legs?
Right. And institutions are definitely still interested, but maybe their approach is shifting a bit, especially looking at those ETF flows versus someone like MicroStrategy.
Exactly. Stablecoins are undeniably growing in importance, becoming more integrated. That seems like a solid trend.
But then you get slapped with a reminder of the risks, like the Mantaray situation. Volatility and, frankly, shady stuff can still happen.
Absolutely. Due diligence is key, and the lines between crypto and traditional finance just keep blurring, with regulations trying to catch up globally.
So it leaves us with a question, I guess. Thinking about Bitcoin versus gold, the institutional moves, the stablecoin growth, what does this all mean for how digital assets fit into, a regular person's long-term portfolio?
That's the million-dollar question, isn't it? It really comes down to individual risk tolerance, time horizon, and staying incredibly informed as things keep changing so fast.
Couldn't have said it better. Well, thanks for breaking it all down, and thanks to all of you for joining us on this deep dive here at Eco Wealth Lab.
Yeah, thanks, everyone.
We'll catch you next time with more insights. Until then, stay curious, keep learning, and we'll talk soon.